Hello friends, welcome back. A very quick review. We always trade in the direction of the trend. A question came in through an email about people having trouble trading with the trend, and once they understand the trend direction, life becomes easier. So we agree with that approach, and that should be the right approach. The question is, what is a trend? A break of a previous pivot is a trend. Sideways action breakout is a trend. We all came together and agreed we are going to use VWAP. Don't worry about the color. So this VWAP is the fat line, which is day by day VWAP. The yellow is 30 moving average of VWAP. There is a previous day VWAP which is statically stagnated for the entire session. So VWAP closed here for the session, it stays there. So the easiest way to think about it is you can put 30, 120 and 160 moving averages on a VWAP, continuous VWAP. Do not reset it end of the day. And this gives us a structure. So from here, the trend is up. So we don't know the trend has shifted unless it has done something with some logic. The early part of the trend is going to be a challenge because you should expect some losses. This is a complete downtrend. Why does it end here is a different thing. We only share those things with the private coaching, professional coaching clients and big banks, right? We don't reveal all these things on the internet. It's not legal, first of all, because people will take this as advice, and unless you have serious license, you cannot do that, right? Everybody is running illegal business online. Okay, anyways, so I'm giving you what you can do, and that should not be difficult for you to do. So once that structure is something you want to work with as a trend, longer term swing trend, 1 week up, 1 week down, especially in commodities. This is, you don't even know what chart this is unless I tell you. They all look the same. They have the same price levels, they have the same approach, they have the same oscillator. This has 12 different things, 10 to 12 different things depending on the market inside it. So you don't need 10 different indicators. So we just use one composite indicator. We use one approach to trending definition. So, and then one approach to uh, the price level to trade and the targets, right? This is just one model to start your professional career at, where you can start making money. You know the direction, you know the pullbacks, you know the entry, you know the exit, you know stop losses, you know everything, right? That's a composite setup. So let's, how do we trade it, right? If trend is down, these labels are plotted and given to you. Above this, do this, below, right, do this, right? So some people are finding, I'm getting a bunch of emails that folks are finding success just with the free stuff now, which is good. That's the whole reason we have been doing this for almost an year, right? Uh, but this is where things start, where your losses stop, and your step one towards a pro trading starts. We can predict all the time, all the swings, all the pivots, all the targets. That is a quite a bit of coaching program you have to enter into if you want to manage hedge funds or work in a prop company or work to work for a big capital managed by the big banks, right? You have to acquire that knowledge first. This is a baseline. All right. So I just wanted to say that in a video because it's better to explain that in a video than just sending response to lots of people who responded, asking questions about. So we should be clear. The bunch of videos we made on trend, but let's do it again. So this is our trend definition at the bottom. The middle is an oscillator for pullbacks. So if trend is down, I'm only shorting, only shorting, only shorting, only shorting, only shorting, only shorting, only shorting. And I know in the end, when I have a couple of shorts, they will flip the trend and I will have one loss. So you know, if you trade 22 days, you will lose 4 days. Now, professional bank and professional, if you look at the statistics of Goldman Sachs, for example, right? They may only have in entire quarter 5, 3, 4, 5 losing days, but they have a lot more power, bandwidth, information, systems, rules, education, psychology, and they hire the best brains. So that's the difference. So that makes sense, right? So if you look at the statistics of 20 years, this was built 2015. So if you look at the statistics, you should win 18 days out of 22 as a retail trader, as an outside, just using model number 1, which is right here in front of you. All right, so when the trend is down, so you have to do some homework. I'm pretty sure everybody has in the retail market hundreds of tools, and they've invested in thousands of indicators, right? So whatever works for you for the trending information, I can only tell you what the banks do based on my and the team's professional experience, right? So how we handle things. But this is all market generated information entirely. We already went through snapbacks, targets, and measured move on this as well on Renko charts. But as a simplified version, if trend is down, you should be thinking about just doing one-sided trading when you're starting your trading career, or if you have been trading for a while but are not profitable. That eliminates, I think, half the trouble and half the losses and adds to your bias. So when I post right here, right, long above this, short above this, this is a no trade zone. It can go any direction. This is where they're collecting the contracts and making a decision. Okay, you got the idea already. So now let's say we are going to go a short again at this level. I will take a shot. And which chart is it? This is soybeans chart. It doesn't matter, any chart. It doesn't matter if I use this on Netflix. Which one is this? You should always do blind studies test, where you don't look at anything. Just look at your trend and look at your stop the price. Stop the price. You can hide the price and you can say, hey, I'm not going to look at the price, but I will follow my rules and see how the system is behaving, right? We know this is long and short. Okay, it went long. We know this is long and short. They will do some manipulation. Why they are attracted to these levels every day? And then it's a matter of just putting an oscillator. I'm at this level, pull back, look at my oscillator, boom. Same thing. Pull back into the level, oscillator, boom. Now, some things may happen overnight. You can trade stocks. You can leverage up. Here, same thing, right? Here, same thing. Look at the oscillator on the other side. So that is called a system model 1 for a reason, because we don't even need the oscillator either, but that is a helper. So again, from here they will drive long and short. When they are hitting these levels, coming back, They're coming down, hitting this level. They're just rotating the market that way, right? 12 months, go back and check. It's all on Twitter. So the story is pretty simple. VWAP based trend is one approach which the bankers and institutions are using. If that is not working for you, if you have something better, which is good, just use it. And if you want to use these levels, I think you already know about it. It's gonna go long and short here, so I'm only interested in going short here, short here. Now this is a short also, but I took a loss, which is fine. Then I'm waiting for it to come back and pull me in again. Limit, buy limit, there we go, boom. Same thing, short only, right? Short only. Keep on shorting. Now same thing happened here. We took a loss, and then short again, right? So if you're losing this box height, as we already discussed all the rules. Okay, so now that's one thing, right? Now this is why we say the oscillator better be on the other side. If I'm shorting this and oscillator is very strong, this oscillator is 300% more stronger than anything on planet Earth. So if I'm telling you to go short, see, this one worked nicely. Why? Look at the oscillator and the trend, all converged right here. Same thing here. If I'm going to go short here, look at the oscillator. It's gonna go up first. It will claim its own profit, right? So wait for it to come on the other side. And you're not bound to just using the current levels. If you're tracking the prior levels, look at this overlapping level. See that? Overlapping block. We already had a discussion on that, but if you have not seen the videos, there we go. It is attracted to these levels, and people know what these are who are in pro trading coaching program. All right, so now you know. And people who are in coaching program, they also know where they're going very precisely. They know where they will go and reflect from, right? Market makers, which are large institutions and the banks, will show up at certain spots. And these green levels are that spot. But which green level is the measurement you have to do. All right, we can do it through what I showed you using Renko higher dimension charts. So, but if you look at this green, right, probability space right here, it went to a previous day, green level bounced from here, which is fine. And this, so this is made fat for a reason. So if you're targeting, if you're taking this approach to short using, maybe you have some oscillator of interest. So combining that with the trend, you have a model of interest, right? This is just, as I said, if you tell me I don't know anything about trading, day one, this is where you start. Day one, you start with a profit. It takes 6 to 8 weeks to stop losing money and start making every week money. Then it goes to the level 2 where you can make money 18 days a month out of 22 trading days, and this is where you need to be at. You cannot go beyond that as a retail market space agent, because we don't have other kind of tools. I mean, we do, retail don't, right? So, but this is the reality of it. But if you're winning, now if you think about it, right, 18 days you're winning out of 22, you're allowed to lose 1 day a week. You're winning 4 days a week. Now if your profit loss are 1 to 2, 1 to 2, 1 to 4, 1 to 4, those losses will mean nothing. Getting to the level of Goldman Sachs and Bank of America and Chase traders, they, as I said, look at the publications on the profits they make. Especially read those reports and see, in this quarter they made $5 billion, right? And how many of that came from trading, and how many days of losses they reported? The stats are all there if you look at it. So you are required to make $50,000 a day on average, $250,000, $1 million. If you want to be a million, if you want to be at that group level, you have to progress through this journey. So I'm telling you all this over and over. making $500 million, $100 million, $30, $40 million in your pocket as your own profit. It's only one thing standing between that: your mental capacity to strictly follow your rules. And there are many times we are short 20 contracts and it goes against us, right? We're down 20 grand in a heartbeat. What do? Run out? No, we don't. We just continue to follow the system non-stop. So you can build your capital at that level, but you have to start with micro contracts. Prove you can trade with 2 contracts. Every time you make $5,000 profit, you add another micro contract. 5,000, you add another. So as your profit goes in the chunk of $5,000, keep adding micro contracts. Once you reach $100,000, you're trading a one full year's lot, but your accuracy is so high, then you can keep adding full lot, 1 year's lot every time you make $5,000, because you have banked your mind has to restructure itself to that level. That's the whole key. Okay, I hope that is clear. So why I keep saying this today exclusively, because people are going through transformation and they're doing huge profits, right? But it took them months. On average, 6 to 9 months it will take. Now, why we have to stick with this for a long time? This is where the banks are, algos are. And then we hit the level 2. And then we have 99 models, right? If I give you 5-6 models, you are done for the rest of your life. There's a timer models, target models, it goes Tesla models. This goes much deep scientific. Being quant engineers, that's what we do, invent things, but they're not in public space. This is good starting point. So you've been watching this for 1 year. Continue to use it if you see value. Don't use something which you're not able to vibrate to, because to change your frequency to the market frequency, it will take 3 to 6 months. There's no way out of it. Some people have this natural affinity to frequency of 5, which is ES market. They just start making money in like boom, in 4 weeks. They never look back. And making $50,000 a day. Some people take 6 months, and 20% people don't make it at all. Then they go and do something else in the stock and they make millions there. So not everybody has to trade something. You can trade NG, natural gas, very slow and easy. Some people love to trade chaos, like very aggressive moves by NASDAQ, right? But the system, methodology and model baseline is not going to change. All right. So now going back to same thing here. So if you can see here, market is just attracted to these levels, and eventually after X number of days, they will finish the target. If you have 4-hour banking bar methodology, 1-hour banking bar methodology, you know exactly why they stop and how you enter. Now this is a helper. You don't even need anything. You should be able to trade just blind chart, blank chart. And that's the excellence, and that's the knowledge which gets acquired in the coaching program from day one. I'm talking about professional coaching programs, not retail. Day one. If you just tell me trade this chart, I can trade it. Very simply, any chart. And anybody can do that. The problem is the knowledge is not given at the retail level, unfortunately. So it made us low at this green level. Why this was a hot level, whatever reason it is. So previous days, track those previous blue lines. It will go, if I go back in time, there is some blue line coming from somewhere. Now the trend is shifting right here. Everybody wants to capture this bottom. You can, using the reflection principle of frequency of night. I will just say that way. Okay, we know this. But if you wait, you wait. Early risk is there when this is early part of the risk. 6, 7, 8 days down, frequency up. You can do Fourier transform. You can transfer this time data into uh, frequency domain to time domain using Fourier transform. You can get some cycles on daily, weekly charts as well. That's not a problem. Get some anticipation. Anyways, but based on what we are doing, this is our trend change. Verification happened right here. So now I will not go and short anymore. I will take longs only. So long, right? We just start going on the other side. Okay, and then it got a little aggressive. Where did it go? Same block. Same block was your balance point across the entire ecosystem. First it was being rejected as resistance, and now it is becoming a support. Long. And trend is now up since beginning of June for last 2 weeks. And it can continue to be long. It can continue to be long forever. There may be some pullbacks. We don't know. Forever means weeks, months. Right now, trend is up. So what happens as a trader? We just need to look at longs. Longs only. Same thing's happening here. We're building some composite ecosystem right there, right? As well. So we are raising the value. Value is being raised, right? You can see these blue lines are moving up and up and up and up and up. Trend is moving up. VWAP is telling us trend is moving up because they want to do business at a higher level. So anyway, so this was tested 2 times, the bottom one, and then this was holding because of this blue levels which are posted before market opens. Hold, came back to this again, right? And hold. So add one oscillator. So if you are going long above, short above, use your oscillator as we already told you, one of the oscillators. Right here long, here long, here long, and here long, right? And it comes back, little deeper pullback, but where? To our levels. Our levels are known to us. This group is making money. I'm getting emails. The people are using to make money on the futures on ES. Seems like that's popular. And some people also want us to start posting back these levels too, which I will. Not a problem. It's all fully automated. So what's happening behind the scenes is only given to people who are in the professional coaching program who want to manage professional money one day through our connections or yours. If you can make money, trillions are available for you. Money is not the problem. Growing the money, bigger money, the game changes a little bit different. But anyway, those are tactical moves. Right now, what's happening right now? We posted that, hey, long and short, right? Trend is up. So what do? When I'm posting long above, short above, you can take a shot, but if you are saying, okay, hey, I am a newbie, I will just not take reflection points. We know why it reflected from here, but you don't, which is fine. But you know this trend is up. So what do? Let it pull back. So the previous levels will be tested, pull back. Right here, it went up, it opened here, is testing it again, precisely to yesterday's level, up, right? Trend is still up. So there's no concept of too high or too low. The first lecture they teach you in quantitative modeling college courses, there's nothing called too high, too low, which is shocking in the retail world because it's too high, too low is what they derive the entire business from, right? There's nothing called too high, too low. So if I don't even show you the price, it's better not to even see the price. If I just show you this without the price, right? Why does it matter to you? Because the tick levels are same. Why does it matter if it is at 14,000 or 1400? the ranges will expand. This tool will catch those ranges. Algos will expand. We already have frequency expansion testing methodology, which I also shared with you if you're tracking these low levels, right? We already know those frequencies. So putting this together to summarize, trade in the direction of the trend with pullbacks. Second thing is, do not worry about too high or low. Third thing is, look and track the previous levels on your charts the way I have. Mine is fully automated. Third is very key because they will retest this level. Fourth, keep an eye on this green fat lines, which I'm not talking about, but I may or may not print those for you because I'm very busy. I just take pictures and post it, right? So what you can do, you can use your ABC Fibonacci extension. We discussed that. You can put your bands, modified shift, so you know your levels, where it is going to reflect from. If you want to know how professionals do it in the bank, that is part of the private coaching. People are in that coaching already, so that is one-on-one coaching only. There's no group coaching, especially in the first phase where you have no clue what's going on. If you're not making money, if you're making money with this, perfect, keep doing it. And so what else? So trend, pullback, and oscillator of your interest, I think. And then the frequency, right? We talked about the frequencies. Where are we on the frequencies? Let's look into ES. I'm not sure if I took them out right there. I think, okay. So frequency, you can see is right here. I did some analysis. I think I reloaded my chart without saving it. It's okay, but you understand where these distance bars are coming from. You can only get those. I can just show you again from the high and the low of the last 30-40 days. Don't go beyond 2 months because the algos will shift their frequencies. Otherwise, everybody will catch the same frequency and make a lot of money, right? There won't be any market. So they shift it. They shift the shapes, the patterns, the frequency, buy and sell programs. But this is one way to catch it. Easy way out, because you have those levels. Then we plot it from the top and the bottom, right? And there we go. And then we anticipate. And this is how we qualify the green levels will hold or fold. All right. So yeah, so these 4 things will keep you in right order, and hopefully you can make some adjustments to your trading if you're not. And then also we put it on the highs and lows, so we are tracking 3 frequencies, right? Now if you know this is going to go either here or here, right? Now you know that. You just don't blindly jump into it. Now people who are in the coaching of the banking part, they know exactly the DNA is right here. In this, there's a DNA is posted, and this DNA is broken, and this DNA is telling you to go long, right? So there we go. So you know your anticipatory targets, but they both came down very close to this guy, and green level is there. It may stop you out, but it's okay. So we have a methodology of entry using the banking models where they manipulate the system, but you can just see based on this only you're getting good. Depends on daytime. You can use SPY options also, whatever, right? And the frequency continues. We told about putting them on the top, and there we go again, right? So you're doing your homework. With all this, you are in good shape, and God bless all. Thank you.